As of November 2016, this regular podcast is available on our Andy Yeh Alpha fintech network platform. In his recent book on personal finance, Tony Robbins recommends that each investor should rebalance his or her investment portfolio only once a year to invest for the long term. Robbins defies the conventional wisdom and so suggests that a smart investor should admit that he or she lacks any special advantage in a myopic attempt to beat the market. A multi-year investment period extends the time horizon for the typical investor to earn both dividend yields and capital gains with much more probable success. Robbins also points out that it is pivotal for the typical investor to start investing in stocks for their higher long-run average returns during his or her professional career. Given the power of exponential compound interest growth, dividend yields and capital gains help accumulate capital wealth much faster. The typical investor's ability to accumulate passive income determines a larger fraction of his or her wealth at retirement age because this income accumulation follows the law of exponential compound interest growth. In contrast, the typical investor's salaries and bonuses only represent a smaller fraction of his or her wealth at retirement age because this income accumulates over time with no compound interest. J.P. Morgan Chase CEO Jamie Dimon says President Trump has now awakened the animal spirits in the U.S. stock market. The key phrase, animal spirits, is the term that Sir John Maynard Keynes coined in his 1936 book on the economic science, The General Theory of Employment, Interest, and Money, to describe the instincts, proclivities, and emotions that ostensibly guide human economic behaviors. Animal spirits manifest in the form of consumer confidence, investor sentiment, and business executive optimism. Dimon refers to the recent stock market rally as a clear indication that consumer confidence skyrockets while investor sentiment continues to be high. Trump tax cuts, infrastructure, and deregulation can all contribute to this CEO optimism during the current interest rate hike. The Trump stock market rally has thus far added $2 trillion to the vast majority of American stocks. With prescient clairvoyance, Bill Gates predicted the recent sustainable rise of Netflix and Facebook during a Playboy interview back in 1994. He said that in the age of information technology, everyone should be able to both access and share visual content such as text and video on demand within the virtual network infrastructure. Today Netflix offers live streaming TV programs and movies on demand. Facebook orchestrates and optimizes algorithmic newsfeed customization on its social network platform. Netflix and Facebook now represent the first and third of the tech giants that form the catchy acronym thing with superior stock return performance. In fact, Gates correctly predicted in his book, Business at the Speed of Thought, the inevitable emergence of palm PCs such as iPhones, iPads, and many other smartphones and tablets in today's digital open society. President Trump refreshes his public image through his presidential address to Congress with numerous ambitious economic policies in order to make America great again. A historic tax reform will reduce the tax burden on American companies so that they better compete and thrive anywhere. There will be massive tax relief for the median American worker. There will be $1 trillion investments in infrastructure through both public and private finance. A merit-based immigration system will reform the current system of low-skill immigration from nearby countries such as Canada and Mexico. A healthcare bill replaces Obamacare to keep Medicaid coverage for pre-existing conditions with generous tax credits and cost-effective solutions for insurance policyholders. New policy proposals will make childcare affordable to ensure reasonable family leave for new parents in order to invest in women's health. The Trump administration will rebuild its current military power to counteract new nuclear threats and ambitions from Iran and North Korea. Tony Robbins explains in his latest book on personal finance that patience is the top secret to successful stock investment. The stock market embeds and follows the long-term upward trend primarily due to inflation, productivity, and population growth, although the stock market may experience short-term peaks and valleys along the great journey. On balance, The most successful investors such as Warren Buffett and Peter Lynch pour money into the power of compound interest with dividend yields and capital gains that accrue on top of both principal and interest payments. While the trend can be one's friend, the long-term upward stock market trend is his or her best friend forever. After he interviews Wall Street's 50 best investors, Robbins concludes that it is important to remain patient as stock prices go through short-term mountaintops and valleys along the way. As the typical investor diversifies his or her long-term stock investment portfolio across several asset classes such as stocks and bonds, he or she should buy and hold multiple stocks with robust quantitative fundamental long-term alpha signals rather than myopic technical trends. We summarize several highlights from the first news conference after Trump's presidential election victory. The Trump administration will repeal and replace Obamacare. Mexico will reimburse America for the hefty southern border tax. Trump's elder daughter and son-in-law, Ivanka Trump and Jared Kushner, will serve as senior advisors to the president. Trump will turn over complete control of Trump Organization to his two sons Don and Eric Trump. Trump will replace the Chief Justice of Supreme Court after his presidential inauguration. Trump will design a cyber defense strategy for the recent hacking attacks from China, Russia, and so forth. Trump's prior close ties and business relations with Russia are an asset but not a liability to Americans. Trump labels CNN as fake news and refuses to take a question from CNN correspondent Jim Acosta. Former Treasury Secretary and Harvard President Larry Summers critiques that the Trump administration's generous tax holiday for American multinational corporations may have inadvertent consequences. This Bloomberg News article and video clip summarize Summers' critiques in several bullet points. When these corporations repatriate offshore cash, this cash is unlikely to be spent on domestic job creation and R&D innovation. This cash might go into greater empire-driven M&A expansion, opportunistic low-cost share buyback, and financial reorganization. This managerial hubris can translate into bigger bonuses and cash windfalls for many senior executive managers to the detriment of minority shareholders. This managerial rent protection not only entrenches key corporate blockholders but also exacerbates income and wealth inequality in corporate America. The supply-side tax cuts and infrastructure expenditures move beyond voodoo economics with extraordinary uncertainty. Can Trump's economic policy reforms prove their worth in due course? Thomas Piketty's recent new book Capital in the 21st Century frames income and wealth inequality now as a global economic phenomenon. When capital wealth grows faster than macroeconomic output, RG, economic inequality arises as a natural result ceteris paribus. The top 1% richest investors own more than 25% of total wealth in America with abundant cash dividends, share repurchases, and capital gains, while at the same time the top 10% richest investors own more than half of total wealth in America. While income and wealth redistribution causes inadvertent distortions, Piketty proposes global wealth taxation as a policy antidote to the inequality dilemma. The major lesson highlights the increasingly important focus on passive income that the typical stock market investor accumulates in the form of both dividend yields and capital gains. President-elect Donald Trump wants Apple and its tech peers to consider better and greater high-tech job creation in America. Apple has asked its primary manufacturers, Foxconn and Pegatron, to consider moving iPhone and iPad production back to America. Pegatron declined to pursue this idea due to cost concerns, whereas Foxconn might continue to weigh the pros and cons down the road. Along the upstream supply chain, Apple's main assemblers such as Foxconn and Pegatron and their affiliates might face cost pressures that would weaken their longer-term operating profitability. A subsequent update suggests that Foxconn will open a new LCD panel display plant in Wisconsin to integrate the current production of Apple's iPhone X in the foreseeable future. Centralizing this robotic manufacturing automation in America helps take costs out of the iPhone and iPad upstream supply chain. Foxconn Chairman Terry Gou has noted that the technology group expects to open up to 3 new plants for better iPhone and iPad production in America. Universally dismissed as a vanity presidential candidate when he entered a field crowded with Republican talent, the former Democrat and former independent mowed down 16 challengers while he broke every rule in the book. Then he pivoted to take on one of the most seasoned and famous politicians in the world, a former Secretary of State, Senator, and First Lady, lost 3 straight debates to her, and earned the disapproval of roughly 60% of all Americans. A dozen women accused him of sexual assault. He bragged about earning tens of millions of dollars each year while he never paid any income taxes in 18 years. His margin of victory in the Electoral College was on track to be the largest that any Republican has achieved since 1988. Trump's presidential election victory caused an unpredictable black swan in almost every non-US stock market in the world. Donald Trump defies the odds to become the new US president. He wants to make America great again. He seeks to repeal Obamacare. He has zero tolerance for criminal aliens. He promises to build a wall on the southern border. He responds to sexual assault accusations with unique temperament. He wants to bring together great talents to implement what he sets out to accomplish during the tough campaign trail. Trump's turnaround serves as a cataclysmic black swan across the major global stock markets. When the US stock market sneezes, the world catches the flu. Can the global stock markets rebound in the same way President-elect Trump turns around what the mainstream polls try to tell us in the past few months? India's equivalent to Warren Buffett in America, Rakesh Jhunjhunwala, offers several key lessons for stock market investors. When the press or his wife says something, the investor must not overreact. Traders should anticipate stock price trends to benefit from them and should also trade stocks when they are not yet popular. The investor should inject his or her capital into a fundamental business with clear competitive moats, not just a stock or a company. Investors should learn from their mistakes by cutting short their stop losses. Emotional investment is a sure way of incurring losses in the stock market. One should not blindly follow successful investors such as Warren Buffett and George Soros without understanding the fundamental prospects of their stock investments and strategies. A wise investor should be patient enough for his or her stock investments to mature when the world discovers these gems. Also, the investor should retain cash in hand such that he or she can take great opportunities when they emerge at the right time. We can learn much from the frugal habits and lifestyles of several billionaires on Earth. It is important to learn to live within or even below our means. Warren Buffett, chairman and CEO of Berkshire Hathaway, still lives in the same home that he bought for about $31,500 in 1958. Facebook founder Mark Zuckerberg now still drives a manual transmission Volkswagen hatchback almost on a daily basis. Adorning Bill Gates' wrist is a $10 watch, and he likes to wash the dishes at home every night for his family. Carlos Slim Helú, founder of Grupo Carso, has lived in the same 6-bedroom house for more than 40 years. Charlie Ergen, Dish Network chairman, packs a brown bag lunch every day. Amancio Ortega, founder of Inditex, eats lunch with his employees in the Zara headquarters cafe. IKEA founder Ingvar Kamprad still flies economy class and often rides the bus. Azam Premji, Wipro chairman, still drives second-hand cars and often reminds employees to turn off lights at the office. Epic Systems founder Judy Faulkner confesses that she has never been interested in living a lavish life. We can learn a great deal from these well-known investors and entrepreneurs by choosing to lead a lean and productive lifestyle with reasonably frugal habits and choices.